Hi, welcome to this video day, which is on the 23rd of August. It's Friday. We're just going to be looking at a Forex pair today, which is on most broker platforms, yet most traders don't look at it or trade it. It's USD Try. Now, we think USD against the Turkish lira offers a really great opportunity for profit. And in terms of a video, we did one a few days ago on the pair, said the USD would probably go higher in our view. It's moved up around 3.8% already. Now, if you compare that to the euro's percentage move over the last 6 months, top to bottom, that's 4%. So Turkish lira's done that in a few days. In terms of best forex pairs to trade, our view is always focus on pairs that are volatile and trending or can change quickly from low to high volatility. Now, in terms of Turkish lira, it's got everything against it in our view longer term in terms of the fundamentals. So the USD coming weeks and months could have a really big move to the upside. And there's nice technical setup for anyone coming in with fresh positions in our view. Now, in terms of this pair as well, keep your eye on it in terms of the euro as well, because if the USD Try really does soar higher, that will impact on the euro. I'll explain why when we get to the charts, and that's what we're going to do right now. But please do keep in mind, is my view as of this present moment in time. It can, of course, change in line with the market conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, you can click on the link beneath this video and get limited live access to our member centre. Right, let's go and take a look at the trade setup. Right, USD Turkish lira daily, nice big move down in the US dollar. Now the US dollar is bouncing back strongly, and I think it's going to get a lot stronger. And the reason I think so is because of the fundamentals and sentiment behind the chart. I'm just going to go through these points very quickly, okay? Point number one, interest rates and inflation are very high in Turkey. 16% plus inflation, you've got interest rates at plus 19%. It's not a good combination at all, is it? Interest rates should actually be higher. It's the president who's pressured the central bank to keep them lower. But, you know, Turkish economy not doing well at all anyway. Turkish government budget deficit short of money, okay, and foreign currency reserves, which means if the USD does really gain traction to the upside, the Turkish government will struggle to stabilize the lira. President Erdogan, authoritarian. He's not inspiring confidence in Turkey or the economy. He's already told banks to lend more money and drop the reserve requirements they have to hold against bad debts. That is really undermining confidence in Turkey because you've got a very weak banking sector. Businesses heavily in debt. And the president wants more money lent to them. And telling the banks keep less reserve requirements against defaults. That is a bad move. Okay, you shouldn't really be messing in the economy. The president doesn't really understand economics. Sorry, I spelled his name wrong as well, but it's President Erdogan. Okay, businesses already said they've got high debt levels, but it's not just the money they owe to Turkish banks. They owe money overseas as well. You can get flight of capital, which is already happening from the country as investors pull their money out. Also, foreign banks not granting so many new loans, rolling over existing loans and calling in other loans early. This could accelerate and really hurt the lira and push the dollar higher. We've also got tensions with Kurdish separatists on the Syrian border. Also, Erdogan, tensions with Kurdish politicians internally. That could always boil over. I'm sure everyone knows it's always or has been tension for a long time between Turkey and the Kurdish separatists. So that could boil over. Risk off, if we get big risk off in the markets, Turkey is vulnerable, okay, in terms of capital flight will accelerate naturally. And I mean that will happen across all emerging markets. When you get risk off, emerging markets, they're the heaviest borrowers effectively. And that money goes back, which I alluded to earlier with the flight of capital. So European banks, big exposure. They do lend in dollars as well as euro. European banking sector is not doing well. Massive exposure to Turkey. Last year we saw the banking sector, which is really in bad shape, come into focus when the USD pushed up really hard on the lira. I think it could come back into focus again, and the banks still extremely weak. So really not looking good for Turkey. And I've put targets here. You can see one of them 620, then last year's high at 7. Okay. Now, in terms of the chart itself, let's have a look at it. We break this 20-day moving average here. It's a strong downtrend, and strong downtrends you tend to see rallies fade back to the 20-day moving average. Yeah, poke through, touches, touches, poke through, touches, poke through, and basically down. When we came up here, with the background we got here, we felt the US dollar would go higher. She went through the level, came back through, no real downside. Last video was on that candle. She punches nicely away from the 20-day moving average. We thought we'd follow through. We do on that candle. Small red retracement, another blue, little red today. We just cut Varas before the close. I don't see possibly any big movement into the close. But yeah, this move here is basically around 3.8%. It's a really big move, okay, in just a few days. Very volatile pair. Our view is we're going to take half our profit in and wait for a breakout. Come to the breakout in a moment, but let's just have a look at where we think any stop protection should be. So basically just drawing a trajectory, you get the idea, higher lows. And I think that is support. The breakout point is going to be here. Basically, so you had those 3 candles trying to get through. This one is getting a bit closer. Breakout, stop behind the level, okay? So what we'll do is our 50% we've taken off the table, get some profit in the bank, and then we can go for the breakout. And we very often do this. If we get stopped out, we'll still make something on our second trade as well. Coming into the weekend, we don't mind holding over the weekend. We don't think there's going to be any particularly good news coming out over the weekend. Got the G7, Trump not getting on too well with Europe. He could create even more risk off. So we'll hold half position, drop another half in, or the other half back in if we get above 680. We're going for 620, obviously. Up to there, it's over 4-1, isn't it? And it's the same distance up to 7. So you've got 8-1 potentially if we reach our target. So to stop on a breakout, tuck back behind there. That's where our stop is on our 50% trade at the moment. If we were stopped out, we'd just look to buy strength, maybe key off the 20-day moving average. But the moment, the way I see it, I think we could see a nice breakout and follow through to the upside. The way the fundamentals and sentiment look, could be a big move. Only need a small position. It's a highly volatile pair. To make really good profits. So I like the look of it. It's done well so far, and I'm hoping it's going to do better for us next week. We shall see. But that is the video for today. Thank you very much for watching as usual. Take care. Have a good day.